Trump deploys nuclear submarines, the jobs report tanks, and crypto markets are in absolute chaos. But beneath the surface, institutional whales are making moves that could signal the biggest opportunity of 2025. I'm Alex from Moonward Capital, and this is your Crypto Pulse Update. What's going on, crypto family? Welcome back to another Crypto Pulse Update, where we cut through the noise to bring you the intelligence that matters. Today's update is critical. We're seeing unprecedented market dynamics that demand your attention. Let's start with where we are. Bitcoin sitting at 113,014, down 2.18%. Ethereum at 3,474, down 4.37%, and the overall market showing significant pressure. Market sentiment is sitting at 69.5, still in greed territory despite what we're seeing price-wise, which is fascinating psychology at work. But here's where it gets interesting. We're experiencing three massive catalysts colliding at once. First, Trump's aggressive tariff bomb, announcing 25–40% tariffs on 14 nations, including Japan and South Korea. Second, catastrophic jobs data, only 73,000 jobs added versus the expected 147,000, pushing unemployment to 4.2%. And third, geopolitical escalation with Trump deploying nuclear submarines near Russian waters in response to Medvedev's threats. Any one of these would rock markets. Together, we're seeing the ultimate stress test for crypto. But here's what the mainstream media isn't showing you. While retail investors panic sell and over $635 million in leveraged positions get liquidated, institutional money is making power moves. SharpLink Gaming has expanded their treasury to 449,276 ETH. That's $1.73 billion worth. And they're generating 567 ETH in staking rewards. They're not alone. Institutional adoption has reached over $10 billion across 64 firms. Meanwhile, Arthur Hayes, co-founder of BitMEX, dumped $13.35 million in positions across ETH, ENA, and PP in just 6 hours. When crypto OGs make moves this dramatic, we need to pay attention. But here's the real story that nobody's talking about: the unprecedented divergence between price action and on-chain fundamentals. L1 infrastructure maintains a commanding 20.51% mindshare despite an 11.16% price decline. DEX platforms are seeing explosive growth with PancakeSwap processing double Uniswap's volume. And TON is the only major asset showing strength with PUA's 1.06% gains while everything else bleeds. This is textbook smart money accumulation during panic. The infrastructure that powers crypto's utility is gaining adoption while speculative positions get flushed out. So what's the play here? 3 key strategies to consider. 1. Monitor the divergence between institutional accumulation and retail panic. These companies continuing to buy despite volatility may signal where true value lies. 2. Watch TON's unusual strength as a potential safe haven narrative developing. When an asset connected to 800 million Telegram users stands strong during nuclear threats, that's meaningful data. 3. Track Federal Reserve pivot expectations. That catastrophic jobs report has pushed September rate cut odds above 90%, which historically creates a lagged positive effect for crypto once the initial panic subsides. If you're finding value in these insights, make sure you're subscribed and hit that notification bell. Our premium members received this analysis hours before the market moved, along with specific entry levels that I can't share here. In markets driven by fear, opportunity emerges for those who understand the fundamentals. Sometimes the best setups come disguised as chaos. This is Alex from Moonward Capital with your Crypto Pulse update. Stay ahead of the crowd, and I'll see you in the next one.